Can Bitcoin play a role in curing diseases through biotechnology research? Interestingly, two companies in the biomedical sector have already invested in Bitcoin, Semler and Quantum Bio. Let's dive into their implications. Hop in! The taxi is ready to go. We'll start with one of the most beautiful traditions in Spain, Mexico, and other parts of the world. These days, thousands of children await the gifts brought by the three wise men, three kings. Joy and happiness to all of them. If you like me to visit your city, let me know in the comments. Welcome to Taxi Biotech, a show to explore news and updates from the world of biotechnology and understand its impact on the stock market. The stock data I present here reflects the performance of companies of the clinical trials and does not constitute any investment recommendation. This is pure entertainment. Okay, the foundation of the Bitcoin reserve thesis lies in this simple fact. Bitcoin has a limited supply, less than gold or the coins in our pockets. This scarcity, combined with its many unique properties, tend to push its value higher in dollars, euros, or whatever other currency over time. This is a biotech channel, so if you are looking for more information about Bitcoin, YouTube is full of resources. We are going to talk about if Bitcoin can support biotech companies in curing diseases. Could Bitcoin play a role in this process? Here is the roadmap for today. I'll discuss how Bitcoin could influence biotechnology. I'll comment the financial flip with Bitcoin that MicroStrategy is showing and analyze how can be applied to biotech. Examine the jump with a motorbike over a cliff that is mixing Bitcoin with biotech, a high-risk game. And finally, I present my own model, purely for educational purposes and not as investment advice. Okay, everything begins with Michael Saylor, the man, the myth, the legend, the CEO of MicroStrategy, who is bringing Bitcoin to Wall Street. How did he do it? Well, he developed a refined method to raise capital, to buy Bitcoin and integrate it into his company's treasury, issuing debt, convertible bonds, selling company shares, and now offering perpetual preferred shares. Saylor raised dollars to purchase Bitcoin. This strategy boosted the value of his company, which in turn increased the value of his shares, and without diluting shareholders. And then he started the circle again. Finally, MicroStrategy has positioned itself as a sort of Bitcoin bank. Companies have followed Saylor. For example, Metaplanet in Japan and in the biomedical sector, Semler Scientific. Some people consider this strategy a Ponzi scheme. I have my own opinion, but today we're here to explore whether this approach could benefit biotechnology. A typical biotech company is far from an average business. The biotech firms we analyze on this channel, small to medium-sized ones, usually don't have products on the market. As a result, they are heavily reliant on debt to sustain their operations and fund their research. If these companies eventually manage to bring their products to the market, they will have cash flow, allowing them to continue funding their operations partially or entirely. Meanwhile, thousands of scientists, we are running against the clock before our fundings run out. So could Bitcoin reserve provide an alternative source of capital for these companies? Let's explore this bold idea further. Okay, let's break this down. I think we can all agree on this thing. Companies holding cash on their balance will see their purchasing power decline over time due to inflation. This translates, in our case, into less time for research and fewer clinical trials to conduct. Now, if we assume Bitcoin is an asset that appreciates over time because to its scarcity, some models suggest around 20% annual growth over the long term, then we could argue that holding Bitcoin might provide biotech companies with more time for research and more clinical trials in the future. Of course, other factors come into play, such as competitors or patent expirations, but you get the idea, right? Let's look at MicroStrategy as a reference because some biomedical companies are following its lead. MicroStrategy is a software company whose goal is to increase the amount of Bitcoin per share. They call this strategy greed, and their plan is never to sell Bitcoin. As a result, their stock price is closely tied to Bitcoin's value, but with significantly more volatility. MicroStrategy uses an evolving strategy to secure more funding to buy additional Bitcoin. Interestingly, MicroStrategy is a company covering its expenses by leveraging the premium value of its shares or bonds relative to Bitcoin. Some investors find this a Ponzi scheme, as I said, but other investors find this attractive because they gain exposure to Bitcoin without the cost of maintaining an ETF, for example. They invest in a company capable of efficiently raising capital to buy Bitcoin, and it offers a high trading volume in options and provide fixed income products to institutions. Okay, so can biotech companies do the same? Okay, here's my take. I understand MicroStrategy's approach quite well. A zombie company that allocates nearly 100% of its treasury to Bitcoin, causing its stock price to track Bitcoin's movements. But a biotech company has a different mission: curing diseases. Can Bitcoin help? Okay, let's analyze the strategies of the two other companies venturing into Bitcoin, Semler and Quantum. Semler. This company markets a product for arterial diseases and earns 6 million in quarterly profits. Not bad for a biomedical firm. Semler started buying Bitcoin in May, initially using cash, but later on they began making sailor strategy by selling shares in open market. Now they hold over 1,000 Bitcoins, and since Semler began purchasing Bitcoin, their stock price has increased 150% compared to Bitcoin's 45 over the same period. The CEO has stated in several interviews that they will continue focusing on their core business while maintaining a dual strategy of long-term Bitcoin acquisition. However, it's unclear whether they have pledged to never sell Bitcoin, as Semler has done. Okay, my framework for biotech companies with positive balance and Bitcoin holdings, like Semler, fits well. If you wait long enough for Bitcoin's value to appreciate, you could secure more funding for new and disruptive research. This could give these companies more time, resources, and opportunity to conduct clinical trials, potentially allowing them to take greater risk because they have more benefits and innovate more. So, can biotech companies adopt MicroStrategy's strategy? I'm not talking about Semler, okay? I'm talking about other biotech companies. In my personal opinion, attempting to apply silo strategy to a single biotech like Semler could work, but I see limitations in the long run if too many companies attempt this. Here's why. Investor preference. As more companies adopt this model, investors who favor Bitcoin-centric strategies will likely gravitate toward companies with minimal expenses, not those with high cost, like biotechs, and which are, moreover, heavily dependent on regulatory approvals. As competition increases, there will be less liquidity for less attractive companies. This will likely reduce the premium investors are willing to pay for Bitcoin-backed stocks, making it harder for biotech companies to capitalize on this model. And losing focus on core mission. If a biotech company shifts entirely to a bank of Bitcoin, this doesn't help to fight diseases. You can take profit from your Bitcoin to put money into your biotech research, but there are not good financial products on the market yet. Right now, these products are high risk and poor attractive. For example, companies can lend their Bitcoin, as Mara did recently, to earn an interest below 10%. However, this risks losing the Bitcoin itself. Companies can borrow against their Bitcoin, betting on a 20% annual appreciation. This is also risky. Finally, they can sell Bitcoin, but they have to pay taxes. Okay, let's move to Quantum Bio, formerly FSD Pharma. As you may know, everything these days seems to be quantum, crypto, or AI. In December, they announced a private offering based on shares, which seems okay. However, on December 20th, they revealed they have purchased $1 million in cryptocurrency. Let's break this down. Okay, they mention buying Bitcoin and other cryptocurrencies. Look, if these other cryptos are stable coins, that's reasonable. Stable coins could help with payments to external suppliers or hedging against the Canadian dollar, providing some operational efficiency. But if these other cryptos are assets like Solana, Cardano, or meme coins like Dogecoin, my personal opinion is there is no second best when it comes to a company's reserve strategy. They also mention they could monitor market conditions to increase or decrease their Bitcoin holdings. Does this mean they plan to trade like a crypto trader? Personally, I don't see the world that way. My point really is, how many shares are they sitting on right now? While growing unused capital is a good idea, they need to act quickly because their 10 million annual expenses is eroding their balance. Notably, on the same day that they announced they were buying Bitcoin, they execute the second tranche of their previous offering. Although the press release caused some volatility, the stock eventually recovered to previous levels. Quantum Bios have a recently launched product, and with some luck, it will generate profits to support their ongoing research into multiple sclerosis. They have some science behind this that I didn't read, and I hope crypto helps them to achieve their goals. But as I said, for a company without profits, I see Bitcoin being used differently. This leads me to introduce my own model for integrating Bitcoin into biotech. Let's dive in. Okay, taxi biotech model for large pharmaceutical companies, which often have a lot of capital, allocating 2% to 15% of their treasury to Bitcoin might make sense for me. It's a small percentage that in the medium term wouldn't significantly impact on their stock performance. This allocation protects against inflation, expands the company's ability to finance new research through additional capital, and secure the company's long-term future for the next 100 years if Bitcoin succeeds. If Bitcoin fails, okay, the company would only lose a small percentage, 10% for example, which you can manage it. For small or medium biotech companies with positive net income, like Semler, using Bitcoin as treasury strategy could also work. My suggestion could be to hold Bitcoin for at least 4 years. As an investor in biotech companies, I want to see the company grow, not spend money on traditional buybacks or dividends. If these companies treat Bitcoin as a form of dividend, that could later be leveraged to fund more research and growth. However, at some point, they would need to sell Bitcoin, lend Bitcoin for a return, or borrow against it to finance research. Fortunately, at present, there aren't loans options with enough liquidity or attractive terms for large companies to collateralize Bitcoin. This may change in the near future, but it would still carry risk, potentially more than simply holding Bitcoin for 4 years. If Bitcoin appreciates, these companies could avoid dilute capital raises. Holding Bitcoin ensures funding for more research if Bitcoin succeeds, obviously. If Bitcoin fails, the company can fall back on its traditional zombie-like survival strategy without growth. For biotech operating at a loss, the situation is more challenging. The idea of using cryptocurrency to save on international transaction cost is a great concept but has minimal impact on overall value. If smaller companies try to capitalize on Bitcoin hype to raise funds for their expense, investors' confidence could wane quickly after a few examples, so I don't go this way. New strategies could be needed, such as securing 4 years capital upfront, but in that case, what could they offer in return? Saylor's idea of perpetual options might be a possibility, but I'm not sure about this. And selling shares in the market to buy Bitcoin and then using it to fund research feel like a form of dilution. Biotech companies would need to explore new financial options carefully without taking risk in their survivals through unnecessary leverage. Any strategy that makes the company overly dependent on Bitcoin for survival could be risky. So in my opinion, using Bitcoin as a long-term strategy is a conservative approach. It protects against inflation and it prevents quick spending. However, this strategy requires patience. It's slow compared to a public offering, but has the benefit of avoiding shareholder dilution. Over the long term, if Bitcoin's thesis holds true and it appreciates due to its limited supply, it could allow biotech companies to take more risk, test more treatments, and pursue disruptive research. And with disruptive research, cure more diseases. That said, the greater the exposure to Bitcoin, the higher the risk. If Bitcoin fails, it could mean losing scientific projects entirely. So we've reached the end of our journey safe and sound. On this special day, let's enjoy a slice of Roscón de Reyes with joy of your families. See you next time.